To quickly dissect those SRF numbers. Sonal?
Well, SRF numbers are largely in line. You can look at the margin number and say, oh, it is higher on a YOY basis. But that is because this time around the revenue number is lower than what the street was working with. Absolute EBITDA is absolutely in line with what the street was working with. So EBITDA has come in at 831 crore rupees, in line with our poll of 832 crore rupees. Profits as well at 432 crore rupees is in line with 421 crore rupees of poll. Yes, it is higher on a YOY basis, but the stock sold off from the highs because the expectation was of a higher growth. Now, if we look at the segments as well, specialty chemicals was expected to do really strong. 37% revenue growth on a YOY basis was expected from the specialty chemicals division. This time around, it has grown only by 24%. So all hopes were piled onto the specialty chemical space because refrigerant prices had done well. There was front loading of purchases because of US tariff wars. So that is where some disappointment has come by. In terms of the other segments, packaging has grown by 4% on a YOY basis. The expectation was that packaging will grow really well on a lower base. So the revenues were expected to grow by 18% on a YOY basis for the packaging segment itself. In terms of the technical textiles business, it was expected to see a decline in revenues, down 11%. EBIT also has gone down by 45% here. So yes, it is a growth on a YOY basis, but the expectation was of a much higher growth. And that's why maybe the stock came off from the highs of the day. Of course, management commentary very important because usually they talk about how they see the year going forward. So inline set of numbers, specialty chemicals is the segment where we have seen some sort of disappointment that has come by.
Thank you very much for that. That's SRF for you. Get into a break. On the other side, we'll get you a check